Us right now is Wells Fargo Investment Institute President Darrell Cronk. Darrell, good to see you.
Thanks, Maria.
Let's talk about what is most important in this jobs report from your standpoint.
So I think hopefully this month it'll be a little less of the fireworks in the headlines on the July report that we've seen on the monthly variability last couple months. My eyes are on the participation rate, on wages, and on revisions. I think all three of those will matter. The last 3 months in a row we've revised jobs lower every single month, so if that trend continues, I think we need to watch that. That has an overall feeling for the economy about strength or non-strength. And then also wage data. We think the average hourly earnings will tick up 0.3, which is a nice bump up in wages. That would put annualized wages year over year at about 2.6%, and they continue to kind of grind their way higher.
Yeah, I mean, the revisions that we've seen, Joni, I mean, the May number was really weak. 11,000 jobs in the month of May.
Yeah, May was probably the biggest concern because we had, originally it was reported at 30,000, then it's revised downward. We had a good number for June, but the overall averages, when you look at job growth, they haven't been very strong, which is concerning. And to Darrell's point, absolutely, they keep revising the numbers downward. So I'm also interested in what the revisions are going to be, for the past 2 months. Looking at labor participation, to your point, Maria, it is at a 4-decade low, and we need to see more people start participating.
People have just stopped looking, right?
But I will say what we're seeing from our customers is that they are having to start to pay more in the market. It's getting very competitive. So with the pressures of unemployment getting lower, and I know we hear from people all the time, and they say, well, we can't find a job. There are many jobs out there. There's 5.5 million job openings, but they're in the service sector, and they're really professional jobs. But we are seeing it's getting very competitive, multiple job offers. Companies are starting to pay a little bit more. So the dynamic is shifting. We really do feel a shift with the jobs that are out there.
Yes, and some of those jobs require different skill sets than in the past. Caroline Cohen, how do you see it?
So this is going to be a critical issue for the election for millennials. We polled a few thousand millennials in our recent survey, and 80% of them are watching the jobs report and thinking about the election in terms of how it's going to impact their careers. So I'm very curious to tie what comes out today to sentiment with respect to what's happening in November.
Do these numbers, I want to ask you, if you get a bad number, does it discourage people from going out and looking for a job? Do individuals watch the employment report carefully?
It's a good point, Dagan. I don't really think they watch it very closely, but if you actually look to Joni's earlier point, which was an excellent one about jobs hard to get versus jobs plentiful, the Conference Board's labor force differential comes out every single month, and that has actually been increasing nicely, which suggests there are more and more, or jobs are harder and harder to get, basically, at this point, which is going to both squeeze wages higher and make the job market even more competitive at a 4.9% unemployment rate, which is basically full employment.
And I think what you're saying, Dagan, is this a vicious cycle, right? And it could be the jobs number, or it could be a GDP number, the economic data. Do we see behavior get dictated by the numbers?
And what number would indicate recession in terms of, would you need to see a real fall off like for several months to indicate that we're heading into a recession?
Actually, this morning I just looked at it. So the 3, 6, and 12-month rolling jobs average now are 150, 170, and 200. So we've been slowly, obviously, walking this down, which is very normal for kind of full employment, anything at 5% or under. And so I think we should expect them to decline. Recession, you'd have to start seeing basically less jobs created than people entering the labor force, which we are a long ways from that. We're actually still creating almost 3 times the number of jobs as people entering the labor force.
And 2 straight quarters of negative growth, obviously. But let me ask you this, in terms of the market reaction. The market's been up, a lot of people talking about valuation being up there at this point. Is any number a negative number for this market that's selling at such a rich level, or do you think there's a reaction that we will see if we get a good number?
I think if you got a really hot number like we saw last month, north of 250, you'd start to bring this conversation back about Fed and September and those type of things. And the market would probably short term not react well to that. Longer term, that's healthy for the economy, but short term that'd be a little bit of a squeeze.
We'll see. Darrell, good to see you.
Thank you.
Thanks so much, Darrell Cronk there.